Welcome, guys, to another roundtable. My name is Adam. Right beside me,
Hi, everyone.
Once again, Rusmin and Kenny.
Hello.
They're switch places.
Yes.
So Kenny's right in front today. So today we're going to talk about the recent market volatility in the markets, especially in the US market. So the S&P has come down probably about 5% over the past week or so, but it's rebounded.
Yeah.
But the Nasdaq has come down quite a bit more as the tech has been sold off quite a bit, come down about 10%.
Yeah.
But it's come up maybe about 5% at this point. So
Yeah.
it's still a bit down from its peak. So we're going to find out what happened during, what's happening during this market volatility and what we can do about it and whether there are any opportunities we can look at. So
Yeah. And even though I think you guys, you mentioned that the market is down like 5-10%, a lot of people may think that 5-10% only, what is there to talk about? But actually, you look at the individual tech stock that are listed in the Nasdaq Stock Exchange. Tesla, for example, down as much as 34% at one time, right, over the past couple of weeks. And Palantir also was down as much as 40%. Of course, those bigger tech companies like Amazon down about, I think, as much as 10%, and they quickly rebounded. And of course, Apple is down as much as about 14%, and it slightly recovered a little bit. Yeah, so it's quite a volatile market lately.
So what is happening? How come there's this recent sell-off, especially in the tech sector? Why are the markets coming down? What's happening there?
I think it's due to the bond market selling off. And the reason why is people are concerned about the effects of inflation due to the 1.9 trillion stimulus that Biden is about to pass. So then the concerns of inflation will increase or cause the Fed to react and increase the interest rate. Then that will in turn bring down the valuation, right? Because if you do discounted cash flow, interest rate is one of the factors that will affect valuation.
Yep. Yeah. So I think there's also another way you can look at is maybe sector rotation, right? So if you look at the past 1 week when it was down 10%, if you look at the S&P, right, all the tech stocks are in the red zone, but then all the value stocks are in the green zone. So probably people are getting out of the techs and going into the value stocks, right?
So like some people are just like taking profit because it's run up quite a bit for tech, quite a lot actually. So some people are just like, okay, I'm going to like rebalance my portfolios, pull some money somewhere else in the capital, somewhere else and all that.
There's also concern of people afraid that there might be a very similar parallel thing that is going on with the current market versus the tech bubble. Right, so the recent correction maybe is just the start of the meltdown. That's the reason why I think people panic and then they start to sell down those highly valued companies like tech. Right, and then you see the recent correction that was so sharp. Yeah.
Okay, but do you think that could be the case? There's going to be another 2000 dot-com bubble right now in 2020?
I think we are very different.
2021 actually.
Yeah, so I think we are very in the different situations compared to the 1999 kind of era, where a lot of tech bubbles, at the time a lot of tech companies were not making profit. In fact, they may not even have sales. As long as they end off with dotcom, any company that listed, the price will start to surge, right? And today, I think bigger tech companies like Amazon, Google, I think a lot of these companies, even Apple, I mean, they have a very solid cash flow. They are profitable, so their valuations are, even though it's stretched, but I think still quite reasonable. So they are not in the bubble territory
it's
yet.
Very different from 20 years ago.
Correct. Yeah, but there are certain stocks, I think, in the crazy valuation, right? People are pushing them. I think we all know what are those stocks. I mean, very popular names.
Okay. Yeah, we don't need to mention those, but I think during this period, some people could be very nervous or anxious about what's happening in the markets. Maybe they don't know what to do. So what would you do in a market like this? You see the market's coming down like 10%. Maybe some of your stocks in your portfolio go down 30%. What would you do during a period like this? How would you manage your portfolio, your individual holdings, and then, how would you manage it?
So I just share based on my own personal experience. So in terms of my own personal portfolio, if any stocks were to drop by 30%, right, below my entry price, I think most importantly for me is I just go back and look at my investment thesis and to ask myself if the fundamentals are still intact or the growth story is still intact. As long as it's still intact, I'll just stay calm and relax. And if I have more money, of course, I'll plow more into the stock if I think it's a good opportunity for me to do so. And aside from that, when I invest in stock, I actually wait for the price to come to me rather than chasing prices, which of course in the past, which when I did it, caused a lot of problems for me.
That's a good tip for dating as well.
Really? Oh, yeah.
Anyway,
So actually, more importantly, for me, before I enter the stock, I ask myself what kind of returns that I'm happy getting. Right, you need to have that kind of expectation, target. Whether, of course, you don't hit it all the time, but you just say, like, let's say I want a 15% return out of this stock, and I ask myself, based on this earnings and this growth rate that I'm gonna get for the next 5 to 10 years that I project to get, right? How likely am I gonna get that kind of returns? If I'm not sure, that's where I factor in a margin of safety, so that if it does a bit poorly, I'll still get my 15% return. So as long as I'm happy with the return, I'll just leave it as it is. So and we're long-term investors, so I'm not chasing anything.
So what would I do in the current or recent market volatility? You know, I'm just watching my Wonder Vision.
So you're kind of ignoring the noise.
Yes,
And
I mean,
just
this is also one of the technique where you can do, right? If you are afraid of looking at the prices going up and down, right, the best way to do it is not to look at the prices.
Yeah.
If you have a stock that you already invested with a very good thesis at a good valuation, right, and you know that the run rate is very long for them, you just shut it off, pretend nothing happened, enjoy your show.
There's a joke where someone's saying the prices don't move just because you stare at them.
Yes.
So just turn it off. So the longer you stare, it doesn't go up. Or go down, whatever it is, right? Just like turn it off.
Yeah, actually that will help a lot in terms of emotion, because some people just look at the screen. Sometimes they go out, they get excited, make a lot of money. But when it goes down, you're gonna bite them again, right? So the best way is just keep it. Don't look at it. Like what Warren Buffett always said, right? Buy a stock as if that you're not going to sell.
But this is only clear if you know what you're investing in.
Yes,
So actually, the company you buy also is very important,
Yeah.
right? So if you buy into, you know that the company is a good company, right? So regardless the movement, right, you know that over a long term they will just be going up. So you can just be won't be afraid. But if you're buying a lousy company, right, you're not sure when you purchase the company. You buy based on someone recommending to you. You buy because this stock is popular. So every time when the stock drop 10%, 20%, you're going to get a heart attack.
Yeah, because you don't know what's happening.
No, some people will diamond hand.
But this goes back to Kenny's point, where whether the investment thesis still holds true.
Yeah.
And to have an investment thesis means you've done your research, your analysis, you understand what this company is about, and that's why you buy. Right, and then that's what you're gonna do, right?
So to go off Victor's point, it's true. If you own compounders, from my experience, observation actually. So in the first couple of years, usually sometimes it will hit your entry price or go below it, but then over like 3 to 5 years, it will have a higher low and higher high, and eventually it will go even higher. So for one good example is Google, right? Google, if you were to purchase at the peak all-time high before it crashed in 2008, and then you hold up to January 2019, that's when we gave a talk, right, on that. You would have increased to about by 200%. So I mean,
even buying at the peak, at
the
that
peak.
point of time, peak valuation,
and the highest possible price. So the key here is to be patient and not be myopic about what's going on right now, or be affected by the noise.
But of course, you also have to bear in mind that we all speak from a long-term as a long-term investor, right? I mean, if you're a trader, a short-term investor, your strategy might be going to be very
entirely different.
In fact, traders themselves, they do have a stop-loss strategy. If stock drop 20%, they may have to cut loss. Right? So it's very, very different.
So we're coming from the perspective of long-term investors buying quality companies that we want to hold for, I don't know until how old I am, right?
Until you retire.
Maybe I hold on until after I retire. Who knows, right? So that's our perspective. So it's very different from a trader. So I think at this point, we may want to like jump onto, since the recent sell-down, especially in tech, markets have come down, the Nasdaq 10% come up a bit recently, but are there still pockets of opportunity that you can look at, especially in the tech sector? Because I think this is a very interesting sector to look at. A lot of potential there. What would you look at this point in time? Since there's a minor market correction, would you look at something?
Actually, what caught my eye is actually Amazon, and because I'm also a Prime member,
so
I realized I utilize the service more these days. And because in Singapore, you order something within 2 hours, they deliver the groceries to you, so it's amazing. So they have grown their US e-commerce platform and their international platform by about 40% this year. So and they're very strong because a lot of people are trapped at home, and they want to have the goods delivered to them. And of course, this will also continue to stay many years after COVID is gone, right? Because it becomes a habit. Of course, you will go out and shop, but at the same time, you keep the membership because you're so used to shopping online, the habit of just clicking. And then with shopping online, there's no like the shop closes at around 10 o'clock at night, right? But then this one you can do 24 hours and have it shipped to you the next day. And of course, at the same time, we are in a digital economy, so they get to benefit a lot through their AWS system, cloud system, because everything we do, from getting our Grab, watching Netflix, booking our travels, and even working when you collaborate with one another on Zoom, everything is all based off the cloud infrastructure, and it's also the best best way for you to start a tech business or an app, because you pay as you go. Unlike traditionally where you have to build a server and then you don't fully utilize the whole server, and it's very costly for them to start a business. So it's really great for the tech scene, actually, the people who wants to.
All right. So like Amazon, you're mentioning that basically e-commerce is something that's here to stay. People have the habit of just shopping online even after the pandemic is over. And for their cloud business, AWS is becoming like the backbone infrastructure of businesses everywhere. I mean, the cloud industry is just going to grow. I mean, there's Amazon, Microsoft, Google as well. All of them, the cloud, Alibaba in China. So cloud is here to stay. AWS is number one in the world at this point. So I think the AWS is very strong as well. So you're looking at Amazon at this point.
So, and also the price has increased from about 1,700 from the decline in March last year to about $3,000, and the fundamentals has caught up because of the cash flow that they have, and of course their prospect is very good because they're going to reinvest this money back into the business to build out their logistic arms, and as well at the same time they're going to invest in their fulfillment centers, so they're going to decrease the time to deliver from about 2 days to 1 day, and even 4 hours, and eventually maybe 2 hours, within 2 hours to deliver things to you. So they have to build out all these fulfillment centers that are closer to the residential areas, so that they can reach them.
So I think you can't just simply look at the price, because last year you look at the price on Amazon was as low as 1,700, and then this year was 3,000. Then you may thought like, you missed the boat, right? You can't, because fundamental the companies has improved, right? So you need to work out on your valuation again, and things will probably be still in the same valuation as compared to last year, right? So they are not stretched in a way, not because of the pandemic. So, and I think also on top, I mean, since you mentioned about Amazon, right? Actually, there's also very similar version of Amazon in China, which is Alibaba, right? So Alibaba also has a very strong market share in China. In fact, I think close to 50% in the e-commerce market, right? So they are very similar in terms of business model, like what Amazon has, and they also have a cloud. So Alibaba Cloud is also one of the, I think, strongest players in China. Okay, so unfortunately, I think Alibaba has not been getting a lot of good news lately. Ever since I think Jack Ma criticized the Chinese government, and since then, the whole Baba share price has been actually plunging. Okay, and Ant Financial subsequently was shoved, and then of course they got the antitrust.
The whole host of bad news at this point.
And Jack Ma disappeared.
And then disappeared, right? But then he reappeared again playing golf, right?
You don't know if it's actually him though. It could be a clone. Anyway, but he's back. Okay. So Alibaba has been gone through quite a bit recently. So what do you think about its valuation and its potential?
I think the valuation is also pretty much very close to, I think, Amazon. I mean, you're looking at a stock that's actually growing at double-digit pace, right, trading at 20 over times multiple. I think, in fact, about 25 to 30 times that kind of range. It's still quite reasonable, right, for companies that have a huge exposure. I mean, China, you have 1.3 billion population. Okay, so that will potentially allow them to continue to grow. Right? I mean, retail e-commerce is going to be the future, right? I mean, physical retail is not going to die completely. It's going to be an omni-channel. In fact, they themselves are also opening up retail, supermarket in China itself, just like what Amazon did, right, with the Amazon Go store.
So it looks like there's, e-commerce is here to stay. So these are the two companies that you're looking. I mean, if anyone is like looking at this point in time, these two companies. I mean, they're big names. People should already know them. They should know them. But even though their prices look so expensive, it's actually valuation-wise actually reasonable.
Okay. So the thing with Alibaba is that maybe people are more concerned with Ant Group, right?
The IPO was shelved and all that.
So we did a video talking about end group previously, right? So, I mean, what we can do as an investor is, if you're afraid of that end group, right, you can just simply remove the whole end group from Alibaba. Basically, that accounts about 9%, right, of their bottom line. Okay, so even then, if you work out your calculation, the valuation, it's still quite reasonable, right? After the recent corrections.
Yeah, so you take that out, and at the same time, with the antitrust that's going on right now, I read the newspaper this morning, Wall Street Journal this morning, that they will most likely be fined about $1 billion, according to people who are familiar with the matter. Of course, they haven't, the government hasn't decided whether how much they're going to fine the company for, but at the same time, a lot of people are overly fixated of what's going on right now. But the thing is, their future are still intact, and 87% of their business comes from their e-commerce platform. So as long as their e-commerce platform continues to grow year after year, honestly, there's no issue with Alibaba at all.
Yeah, I think that there's nothing's going to change that, right? I mean, that has been built over decades. That logistics, that distribution, the brand, everything is basically a part of life in China. Same for Amazon in many parts of the world. I mean, I didn't know 2 hours in Singapore. I should be a Prime member myself, man.
It's quite impressive, the kind of service that they provide. I mean, I do purchase certain stuff from Amazon Prime. I mean, if it's not the product that you like, or you can always ask for a refund.
Yeah, and they're great customer service. So I think that's why people go back, because they trust that Amazon will take care of them.
Yes.
So I think the message here overall is that despite the market volatility, what you guys will do is that you just keep calm and keep buying.
And enjoy your Disney Plus.
Enjoy your Disney Plus, your Netflix. So even though the markets can come up, go down, you just got to keep calm and understand what you're buying, what you're investing in, and really keep a long-term perspective on what you actually hold as your assets. And like Kenny says, if they're compounders, you expect them to really become more successful, more valuable down the road, 10, 20 years from now, because this is the world that we're going to live in that future, and these companies are still going to be there. You want to own a piece of that. And you want to hold on to that. You don't want to just go in and out like a dance, and then you just kind of get lost in the, you just get lost in the markets and all that.
And of course, a very strong caveat. I think a lot of us own Amazon and Alibaba.
So
we are buyers, so you still have to do your own homework, due diligence. Right? It's very important to understand what you are doing.
We can't cover everything in the roundtable like this. There's really a lot of research that goes into understanding. Like Amazon's a big business, Alibaba as well.
It's a big
so really do take the time to understand what you're buying, and once you really understand something, you like it, you really enjoy holding on to it actually, instead of trying to get in and out all the time.
And you spend happily after that on Amazon or Taobao.
So that's why you spend so much on Amazon. Yourself, right?
I gotta support my own business, right?
That's one way to look at it. So I think that's a pretty good wrap up for this roundtable. I hope that really gives you some insight on what you should do, during a market situation like that, up and down. Keep calm and just, I wouldn't say keep buying. Right? It really depends.
Depends on valuation.
Depends on valuation, but keep calm and hold on to your portfolio for the good stocks, right? And just enjoy the ride, right? So thank you so much for joining us. If you like this video, just hit the like button and of course subscribe to our channel. So thank you once again, guys. Victor,
thank you.
Kenny, Rustin on this side today. Thank you for watching, and we'll see you around again.